The auto industry is facing a growing debate. Has the nation reached peak truck? Something is clearly shifting in the truck market. Brand new pickups are sitting unsold, prices are dropping week by week, and dealers are losing money just to keep inventory on the lot. This isn't a seasonal slowdown. Pressure has been quietly building and is now surfacing. Financing costs are rising, buyers are hesitant, and manufacturers are constrained by past production decisions. Trucks, once reliable profit engines, are becoming liabilities. Production continued for months, even years, because stopping lines created risks with suppliers and could form patterns executives were reluctant to admit. Inventories built up in plain sight, overflow lots, temporary fencing, and trucks under tarps. Maintaining output was rarely a dramatic decision. It was a series of incremental choices, influenced by managerial inertia and the financial and political risks of scaling back. Managers debated allocations and the signal a pause might send to investors. Dealers received deliveries they hadn't requested, creating a mismatch between what was ordered and what arrived. The system didn't collapse overnight. It bent under pressure until it could bend no more. When it reached that point, sudden daily markdowns and mass displays of discounted stock became visible, revealing the pressure that had been building. The effects hit dealers immediately. Financing obligations grew, forcing urgent price adjustments and reshaping expectations for inventory and cash flow. Floor plan interest continued to accrue, turning what had been a manageable expense into an urgent concern. Days in stock became the new metric, with each extra day increasing costs and threatening lender agreements. Incentives became more aggressive, dealer holdbacks deepened, and price cuts that were unthinkable weeks earlier became standard. Some vehicles might never recover their expected margins, and auctions were used to stop losses. Boardroom conversations shifted from growth strategies to survival planning. Sales staff experienced immediate effects, targets changed, commissions became harder to earn, and morale dropped. Uncertainty was the biggest challenge. If prices fell this much, could they fall further tomorrow? Customers began calling with questions about trade-ins and loans, increasing reputational strain. This created a self-reinforcing loop. Financing pressures drove price cuts, which trained buyers to wait, which increased days in stock, which raised costs and justified further reductions. Dealers were no longer managing inventory, they were reacting to it daily. As markdowns spread and margins shrank, attention shifted from spreadsheets to empty lots. The empty showroom effect became tangible. Fewer customers changed the psychology of buying, slowing foot traffic, test drives, and sales. Retail operations revealed their fragility, as finance offices, parts counters, and service bays all felt the ripple effect. Showrooms that had been lively and competitive now felt hollow, with silence signaling caution. Confidence is a market lubricant. When it disappears, transactions slow, negotiations lengthen, and buyers scrutinize more closely. Dealers adjusted staffing, shortened hours, and cut marketing, while buyers delayed commitments. Unsold units accumulated upstream, tying up capital and straining logistics. Production margins were affected, especially for high-margin trims. Factories felt the arithmetic of unsold units, with storage costs rising and supplier relations at risk. Even premium models became liabilities, as affordability concerns drove buyers toward lower-cost options. Analysts revised break-even estimates, leading to a more conservative approach in production planning. The market began shifting. Lower-priced competitors gained attention, redefining value from luxury to practical affordability. A credible low-cost option showed buyers that essential mobility didn't require premium pricing, changing bargaining dynamics. Consumers questioned why premium trims cost so much more than practical alternatives. This affordability competitor didn't need large volume. Its credibility alone influenced the market. Ultimately, the truck market is undergoing a profound transformation. Rising costs, inventory pressures, and changing buyer expectations are forcing both dealers and manufacturers to rethink strategies. The industry is moving from growth-focused optimism to careful preservation, and the presence of credible, affordable alternatives is reshaping what buyers